How's it going, everyone? This video is going to be over the easiest draw on liquidity, and it is generally present almost every day in the market. Now, before we begin, I'd like to give a shout out to the MMXM trader for his teachings, so let's get into it. Now, unless price is going to remain in a consolidation, as shown here, where it fails to take out either side of the range, it is going to reach for previous day high or previous day low, or both of these. So knowing this, if I stay out of consolidations, if price is trending up, I can anticipate previous day high being taken, and if price is trending down, I can anticipate previous day low being taken. So let's hop into the charts and look at a few examples of this. So the easiest way to define a trend is in a bullish trend, price will continue to take previous day's high over and over again, and in a bearish trend, price will take previous day's low over and over again. So here we can see we have PD arrays supporting price higher, so I'd anticipate price to keep reaching for previous day's high. So if we go ahead and mark this out, go ahead a day, you can see previous day high has been reached. Continue this. Previous day high has been reached again. Previous day high has been reached again. And you can see how it continues over and over again. And that is how you know we are trending upwards. So let's take a look at when price is trending down. So here you can see price has been trending down, and if we anticipate this to continue, we'd like to see previous day lows being ran out. So as we continue ahead here, you can see we took out our previous day low, as well as these lows here. Here we do not take out this previous day low. What do we have? We have a fair value gap here, so we could reach into here before moving lower. So here we get a retracement. Now we get a down close candle respecting the consequent encroachment of this fair value gap. So now mark out our previous day low. We reach for our previous day low. And if we expect this to continue, we'd want to see price continue to take previous day lows. Now, it's not always going to be so clean of a trend down. For example, if we get retracements or liquidity sweeps here, we're going to have a series of up-close candles creating order blocks. So now that you understand that when price is trending up, we are likely to see previous day's highs being taken, and when price is trending down, we are likely to see previous day's lows being taken, let's hop back into the PDF and explain how to use this. When I get into the daily chart, the first question I ask myself is price more likely to reach previous day's high or previous day's low? If I can answer this question, I then have a draw on liquidity and a target, and I can look to frame an entry on a lower time frame. So for example here, if price is going to be reaching for previous day's low, I can drop down to a lower time frame and look to find a point of interest to frame a trade towards that previous day's low. Now, besides looking at the overall trend to determine if I want price to reach for previous day's high or low, there are a few other ways that I can do this. Now, I cover this in depth in my daily bias video, but we will go over it quickly so you guys know what I'm talking about. What I focus on is displacement or a lack of displacement over or below previous day's high and low. So for example here, when we fail to displace over previous day's high, that gives me a downwards bias looking for previous day's low. Similarly, when we fail to displace below previous day low, it gives me a bias to reach back into the range. So a quick little example here, we have previous day high, we fail to displace over it, a reversal is framed there, and then the next day, we can't anticipate previous day low being the draw on liquidity. And then since this candle displaced below these lows, I'm anticipating a continuation of the trend. So for the next day to be reaching for this previous day low. Now here a reversal is framed. We can't displace below this low. So then I want to see previous day high. Now on this day, we close over the previous day, and I'd want to see previous day high once again, as shown here. Now I cover this more in depth in my daily bias video, like I said, but I just wanted to show you how I use the daily chart to frame a draw on liquidity. The last thing I'm going to touch on is how many days I will look back for previous day's high and low. And for me, that is 3 days that I will look back into price action. So for example here, if I am on the current day, I will look back 3 days and mark out the previous day's high and low. Similarly over here, current day, last 3 days mark out the high and low. And marking these out and extending them can also add some confluences. For example here, when we deviate below this previous day low, come back into the range, we retest this previous day low before continuing higher. And if you've watched my box setup video, you know what that looks like. So let's hop into some examples. So here we are on NASDAQ's daily chart, and we are going to go through some examples. We will first go through the daily chart and find our bias for each day before dropping down to a few lower time frame examples. Now in these examples, I'm going to focus on just using the previous day high or low as my target. However, when I'm actually watching price, I will look for extensions beyond and below previous day high and low. So here we have a very aggressive displacement higher, so I'd be looking for previous day high to be taken. Here we take previous day high, close over, and I'd want to see previous day high be taken once again. Here we take previous day high, displace over this fair value gap and over previous day high, so I'd want to see that taken once again. Here we close over, so I'd want to see previous day high being taken once again. Here we take previous day high and low, but we close bearish, and we also reach into this daily fair value gap. So with this in mind, I'd want to see price reach for this previous day low. Here we get aggressive displacement below previous day low, so I'd want to see price reach for this previous day low. So here we get an up close candle, but my idea hasn't changed. Because we reach into this daily fair value gap and displace lower, I'm wanting to see lower prices and reach for these equal lows. So with that idea in mind, I'd want to see previous day low and this prior low as well. So here we do reach for this previous day low and the prior day low as well, and we close back into the range. Now, if you've watched my daily bias video, this is where you might get confused and be looking long. However, with the structure being bearish, I ideally want to see price close below this up close candle. And what would that do? It would validate it as an order block. So let's see what the next day does, but ideally reach lower and close below here. So here you can see we reach lower. Now we don't close below previous day low, but we do aggressively move lower and close below this up close candle, validating it as an order block. So with that idea in mind, I'd want to see price reach lower once again. Here you can see we retest that up close candle, reach lower, so I'd want to see previous day low again. Once again, displacing lower, would want to see previous day low. And there we go. This places below this low, closes back inside. So ideally, I'd want to see price reach up to this previous day high, or get some sort of consolidation after running these lows. So even though that I had a bias for almost every day here, it does not mean that I will find an entry each and every day. So let's go back to this Monday here and see how it would play out, and then look into the next couple days. So here I have marked out our new week opening gap and the consequent encroachment of that, as well as our previous day high, which we noted in the last part as our drawn liquidity for this day. So let's see what happens as we come into the New York Open. So as we come into the New York Open here, you can see we consolidated through Asia and London, and then we manipulated down here. So seeing this as accumulation, manipulation, I'd want to see distribution higher into this previous day high. So let's go down to a lower time frame and see if we can find an entry. So if you've seen my box setup video, you know that price could reach back into this deviation here before moving higher. But what do I see here? I see a 5-minute fair value gap. So looking to enter on the fair value gap, I stop in the low, and then targeting this high, I have a risk to reward of just about 2R. So letting this play out. And there we go. You can see price reached a little bit lower. It reached into this deviation of this range before reaching higher. It rejected off of this new week opening gap, consequent encroachment, before expanding into our previous day high. So there is an example of going top down. So let's go to the next day and see if we can find anything else. So taking a look at the next day, we will mark out our previous day high and then go down to the lower time frames. So here we are on the lower time frames with our previous day high marked out. So let's see what happens as we move forward in time. So you can see the Asia session already took out previous day high. So just using previous day high or low to frame a target and a drawn liquidity With that already being taken in the Asia session, I am not interested into the New York session. Let's let it play out and see what happens. And you can see we get a continuation of order flow up into the New York AM session. Let's go to the next day. So here we are on the next day. I've marked out our previous day high, which I'll be using to frame a drawn liquidity. So let's see what happens as we move into London session. So you can see here, London doesn't really do a whole lot, kind of consolidates, takes this high, moves lower, takes its initial low. So let's see what happens here as we move towards the New York AM session. So here we move a little bit higher, and that is 8:30 news, which manipulates down. So now if we're going back to our first example, accumulation, we manipulate down. Where would we want to see distribution? Opposite of our manipulation into previous day high. So it looks something like this. So let's go take a look at the lower time frames and see if we can find anything. So here we are in the lower time frames, and it's a little bit easier to see that accumulation, news manipulation, and then now anticipating distribution into previous day high. So let's take a look and see if we can gain an entry to this. Ideally, I'd want to see a close below this 8:30 opening price and this series of down close candles here. So let's see what happens. And there we get a close below this. So just in terms of risk to reward and using the box setup, I'd want to see a retest of this manipulation before reaching higher into this distribution and previous day high. So let's see what happens. And there we go. We reach and hit our previous day high, completing our AMD. So let's go take a look at the next day. So here we are on the next day, and I want to see price reach for this previous day high. So let's drop down to the lower time frames and see what happens. So here we are on the lower time frames, and we have our previous day high marked out. So let's see what happens. Here you can see at the start of the Asia session, we already took that previous day high. So just watching for previous day high and low as targets, I'm not going to be watching the following sessions. However, let's see how it plays out. And you can see overall it was a pretty choppy session prior to reaching into this daily fair value gap here. I hope you found this video helpful and insightful in regards to drawn liquidity and daily bias, and that it showed you that even with daily bias or a clear drawn liquidity, it's not always possible to get an entry. Now, if you did enjoy this video, please consider liking and subscribing, and I'll see you guys next time.